What's up, investors? It's the Russian dude. To begin with, right here is the picture with all the earnings reports which are happening this week, so feel free to pause the video to see if any of your companies are reporting. But now, primarily, let's talk about the situation on the crypto market and why this passion for Bitcoin, it looks like it is going to be over very soon. First of all, to begin with, the outflows of Bitcoin ETF last week reached negative $116 million. And according to this sentiment you can see right now on your screen, a lot of, or I would say the majority of short-term crypto holders are now in losing their positions. They are not profitable. So guess what happens? Short-term holders are either traders or just new investors. They see that, well, I was promised I can make money in crypto. They don't see that this is going up. It's not going to the moon like they've been promised, and they're like, well, I'm just gonna sell it. What's the point? Crypto is a scam. And specifically, on average, short-term Bitcoin holders right now are negative 7% in their positions. And historically, as soon as this average number reaches negative 12%, this is when real panic begins. In addition to that, just across the entire crypto market, a lot of different coins are also in negative territory, and the sales are continuing to happen. And speaking about the long-term Bitcoin holders, they are neither buying nor selling. They just kind of suspend their activity and they pretty much do nothing. They see where the market goes next. Because those people who wanted to lock in their profits, they already did it. So once again, in the end, it reduces the activity on the Bitcoin crypto market significantly, just to say the least. And because of this, the activity right now on Bitcoin's blockchain reached its minimums since 2019. Yes, all the way since even before the pandemic, which once again confirms that people are no longer interested in crypto market that much. Nothing simply is happening. This next picture perfectly summarizes the activity once again on the crypto market, which shows you inflows and outflows into Bitcoin ETFs. And well, as you can see, for the last several months, it is nothing even close to what it used to be. But if you are a very big optimist, don't worry guys, there is still hope. According to this technical analysis, as long as you believe in technical analysis obviously, according to its previous halving, the situation, the behavior of the Bitcoin price was relatively similar. So potentially we might see some skyrocketing in the near future, even though triple-digit percentage growth, I don't think that you can expect them anymore, because like we talked about in my previous videos, the crypto market has already matured, so there is not that much volatility. But there is still a huge volatility and the possibility for absolute mind-blowing growth in some alt and meme coins, such as, for example, specifically a meme coin called Kitty, which is named after Kit Gill, which is basically a guy who bought a lot of GameStop shares long time ago, several years ago, and then he made hundreds if not millions of dollars because of this trade. He became extremely popular in Reddit community. So long story short, his meme coin called Kitty, he did gain just a mere 10,000% growth in less than a single day. And the reason for this, it is because this guy under the nickname Roaring Kitty, he started finally publishing first posts on Twitter, or X if you prefer to call it like this. It has been the very first posts he did after a 3-year break. So people automatically assumed, well, something is going to happen with GameStop, AMC and all these other meme shares. And specifically his main share, what made him pretty much famous, GameStop, it even gained at some point more than a 100% growth in a single day just when the markets opened. The trading has been halted several times and then the price kinda stabilized, only yielding approximately 75% or so growth in a single day. This guy has not even announced anything yet, he just published some seemingly unrelated videos on his ex-Twitter account, and that's pretty much it. So as you can see, he has an influence on this particular company. And just like previous time, most likely one of the reasons why this growth was just skyrocketing, it is because there was an elimination of short position holders, because there was this so-called short squeeze, guys. Please take a look on the internet, or even I have one of my previous videos on my original channel, The Russian Dude. I'm explaining precisely what is a short squeeze. But basically they were forced to liquidate their positions, which basically means they were forced to buy GameStop shares. They started buying, then even more short positions were liquidated, then they started buying, and eventually this became a snowball chain reaction effect. And in this one day alone, more than $1 billion worth of short positions against GameStop were liquidated. And now the main question is the following. Will this GameStop growth will be same mind-blowing as it happened the first time? Please guys, let me know down below in the comments. Personally, I do not unfortunately think it's gonna happen this time again, because well, people already know, people already expect, and as soon as some people start seeing high growth, a lot of them will be taking profits, not waiting for hundreds, 200, 400, 500, 700% growth opportunities. Personally, once again, I don't think it's gonna happen this time. And to sum it all up, guys, literally just give me 1 minute to talk about the situation on the stock market. To begin with, right now, approximately 90% of the S&P 500, they already released their earnings report, and more than 75%, if I'm not mistaken, they were able to beat their earnings expectations, which forced this Wall Street analytics. They were forced to revise their forecasts for the next earnings season. A lot of them, they started increase their expectations, hoping that companies will be even more profitable than they are right now. Which might seem like a pretty optimistic thing, but well, these are once again Wall Street analysts, Wall Street professionals. They always change their forecasts. As soon as the situation is bad, they're gonna revise the forecast and make the expectations lower than they are right now. So yeah, you can almost never base your opinions solely on these Wall Street professionals. Like, they change shoes sometimes several times per day. Because what we do have to pay our attention is on actual macroeconomic and microeconomic factors, such as, for example, obviously the inflation. And right now, as you can see from this next graph, the inflation expectations, they are increasing. The reason for this is one of the most recent Federal Reserve meetings, when Jerome Powell said that, guys, the inflation is not budging, we might not reduce the interest rates, and the inflation in fact might start climbing up once again. Sorry about that, we did everything we could, it's not working. But wait, yes, there is more. If you've been watching my previous videos, you already know that massive multi-billion and trillion-dollar companies, even though it's only just like several of them, they do have a massive impact on the stock market as a whole. These companies, if they are growing, the S&P 500 most likely is gonna follow it, and then the stock market itself also kinda in the small uptrend. If these multi-billion-dollar companies start falling, the stock market will follow them most likely as well. And well, how do these big companies maintain their stock share prices in the uptrend? Majority of this is because of these good dividends, good promises, good announcements, but most importantly, it is because of shares buybacks. Just Apple alone recently announced $110 billion shares buyback, the biggest in its history. I mean, just think about that, $110 billion shares buyback, which obviously boosted the price of Apple, and people were even closing their eyes on that the actual iPhone sales are not doing that great, and the iPhone is the flagship product of Apple. And you probably already know, guys, that these buybacks have been the biggest, the main moving force for the share prices going up since 2011. Companies are not going ridiculously high from earnings to earnings report at this point anymore. The increase percentage is not that massive anymore. It's just simply very complicated to increase your revenue when it's already in hundreds of billions of dollars. It is just extremely complicated to get a 50% growth. It means $50 billion more in revenue. Where do you get this from, right? For this reason, they just continue announcing buybacks, and this is what keeps the share prices up, just like in 2011. And this is exactly what is happening right now. This is what helps the stock market prices, the stock market itself, to persevere in this situation of uncertainty, doubt, high inflation, high interest rates, and every single mess that Federal Reserve puts us through. As always, guys, thank you so much for watching. Please subscribe to my channel if you found this informative and like this video, and see you tomorrow.